The crypto market in November 2025 is in full volatility mode. Earlier this year, institutions poured into crypto. ETFs were approved, DeFi was booming, and the total market cap soared past $4 trillion in Q3. But the party didn't last. Now the sector has shed over $1 trillion in just 6 weeks, driven by fears of an AI bubble, a cooling tech sector, and global economic uncertainty. Bitcoin, the market's powerhouse, crashed from $106,000 in early November to levels last seen in April, erasing all of its 2025 gains. Global outflows exceeded $3.2 billion, with U.S. investors responsible for 97% of the retreat. All while the Federal Reserve signals cautious easing and stalled quantitative tightening. But 2025 isn't a failure. It's a year of major maturation for crypto. Institutional adoption skyrocketed. BlackRock, Fidelity, Visa, PayPal, all integrated crypto products. Stablecoins processed $46 trillion in payments, a 106% year-over-year jump. Global crypto users hit 716 million. Tokenized real-world assets shot past $30 billion. Regulations finally brought clarity. The US rolled out the Genius Act, and Europe implemented MiCA. Meanwhile, Ethereum Layer 2s achieved sub-cent fees and Solana dominated network activity. Here are the trends shaping the market now. Payments and stablecoins. Crypto is capturing top talent again. Stablecoins are becoming essential liquidity rails. Tech infrastructure, zero-knowledge proofs, L2 dominance, privacy tech, account abstraction, and even AI agents transacting one-chain. DeFi and real-world yields. TVL doubled to $300 billion, though Q4 hacks cost over $200 million. Macro forces. Global GDP at 3.2%, potential Fed rate cuts, and possible $2,000 U.S. stimulus. Social Fi plus AI. New product market fits emerging. Regionally, the picture is mixed. The U.S. and Switzerland bleed outflows, while Germany and emerging markets like Vietnam and Brazil see rising adoption, some hitting 30% penetration. Let's talk NA, the governance token of Ethena, the protocol behind the synthetic stablecoin USDe. As of November 23, 2025, price is $23.6, market cap is at $175, volume is at $149 num, which is up by 50%. Circulating supply is 7.42 B. ENA at was $1.52, total value locked is $7.6 billion. Given the above metrics, ENA is signaling potential undervaluation. Ethena is expanding rapidly. Partnerships with Nunchi and Hyperliquid, a 2026 fee switch sending 30% of revenue to stakers, and institutional products like USDe are on the way. Community sentiment is bullish, especially with yields outperforming E3 staking. Predictions for ENA vary, heavily influenced by the broader market's recovery, Ethena upgrades, and macro conditions like Fed easing. Here's the snapshot. Bearish cases, 24-27, base case, 24-33. Bullish would be 40-6, community extremes I 80-126. Here is my synthesis. In Q1 2026, ENA will likely trade between 24 and 33, offering 2% to 40% upside if markets stabilize. A true bullish breakout, up to 60 cents or more, depends on the fee switch, institutional USD demand, and a broader DeFi resurgence. Bearish risk zones sit between 19 and 24s if the current downturn drags on. 2025's Q4 crash feels brutal, but it may be clearing the way for stronger foundations in 2026. Whether ENA becomes one of the standout winners depends on adoption, yields, and the next macro catalyst. As always, do your own research, stay cautious, and stay informed.